following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 9th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Of course, the easiest way for you and I to have an extraordinary Thursday is to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go look at the circumstance of the markets. We'll go see what the bulls and bears are doing out there. I'm absolutely grateful for your presence here this afternoon. I'm here to serve you. Feel free to pick up that phone. Dial on in at 877-927-6648. Internationally, you can call us at 727-445-1044. This is Terrific Thursday. Of course, it's none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow. She's trading up 97 points, trading at 17,607. S&P is up 11 points, trading at 2,057. NASDAQ Composite up 37 at 49.47. Russell up 8 points at 12.37. DAX closed up 250 points. The FTSE up about 91 points this morning. You've got gold trading back $3. Silver is up 19 cents. Light sweet crude is up $1.43. Leading the charge here to the upside of this Chipotle Mexican Grill. That's on fire, up $15, up 2.5%. Priceline up about $10, less than 1% though. Intercept Pharmaceuticals up 4%, that's up 10. Ultragenics Pharmaceuticals up 10%, up $9. To the downside here, you've got Yang, I believe that was the direction share bear on this Shanghai indice, I believe, one of the China stocks out there. So those are leading. Let's see, dollar-wise, individual stocks, looks like WD-40 off $66. That's down about 6%. Okay. So we got to bounce. The question is bounce or rally. I don't have my rally cap on, but I could turn around and probably put on a rally cap. I don't know the answer to that question. So let's go surfing around and see what we can find out. Determine here at about 10 past 1 on July the 9th out here. Let's first start off with taking a look at our summation index. We're going to take a look at this for three of our different indices. New York Stock Exchange, left-hand panel. Center panel, NASDAQ Composite. Right-hand panel is the Dow. As we speak right now, just barely above the zero line is the Dow. I'll go ahead and explode this up on your screen here. Of course, this is a chart. These three charts here really make a difference at the end of the day. So inter-session, it gives you an idea as to what's going on. Look, if the Dow were to close just about right here, you would have the bulls flexing their muscle, having taken back control of the Dow out there. Not the other two indices up there. Price oscillator still below zero. But nonetheless, where this finishes today will be one indication as to who really is in charge of the markets. At the moment, with regard to the NASDAQ Composite, it still is sellers. With regard to the New York Stock Exchange, it too is sellers out there. Both of these need wide market breadth today in order to get those price oscillators above the zero. It's not impossible for that to occur. And the composite is off to a decent start. It was off to a even better start at about 10:30 this morning, but certainly jumping off of a extreme oversold trampoline line. If it can get above zero, especially if it got above zero today, that would tell you that the rally cap is on inside of the markets. Without doing that, we're probably not going to find out here for the next day or so, meaning potentially Monday with regard to whether this is really just a bounce or a bottom. If we go take a look at the VIX index, one of the indicators that suggests that, hey, maybe this is more of a bottom than a bounce. If we just simply go ahead and just take a look at the numbers, if you're watching us on TigerTV, we've got the cash indice up on my screen. That's trading out at 1867. That's off 5% here this morning. That's down, or this afternoon, down 99 cents. But if we take a look at all of the futures contracts going out, we're going to see the cash index is trading above all of the futures contracts until we get into 1872, until we get into the 2006 contract for, what is that? That's for January. So what traders are communicating to both you and I is the fear that's out there, if you want to call it fear. I don't like necessarily they're not too concerned about the volatility going forward out here. So there's a contango, if you will. And these contangos, yesterday's contango was pretty amazing when we took a look at the actual futures contracts out here. But it's an element that tells you that really a lot of what's going on out here is potentially just truly overblown, because the further out months, okay, the forward months out here are not giving the same message that we're seeing in the cash indice out here. So that is a clue for you and I to pay attention to. Of course, we also pay attention to what's going on inside the VIX index with regard to its 50-day exponential moving average, well above that level, which is 1487. What price was unable to do yesterday, even in the flurry going into the close, was get above 1980, close above 1980, that little resistance level of that shooting star. That dates back a week ago. June the 30th out there was that candle session. So when we take a look at the actual cash indice and we go take a look at the futures contracts, there is a hidden message, unless you actually look at it like you and I just did out there. So that's what we know about what's going on in the markets. If I were to say what chart is the next most important chart for you and I to take a look at to help us determine whether it's bounce or rally out here, I would say what you and I would do is we'd go over to the 30-minute chart here for the S&P futures. Why? Well, the reason that we would do that, if you take a look at the low that was put in yesterday afternoon, give me a moment here, it'll punch up on the screen. That was at about 3 o'clock in the afternoon yesterday when prices, the 30-minute chart, by the way, of the S&P futures we're looking at, price got down to a level of 2,036.25. It closed out at 2,039. By the way, write this number down on a pad of paper, 2037.25 for the ES Mini. That level has been tested several times here since since this past Sunday, and price has not been able to close below that. That's your line, truly, of demarcation to determine whether you're bullish or bearish. That's your line to determine whether there's another leg down or whether there is just simply a bottom formation that is occurring here inside of the markets. If, in fact, we see a close below that, I'm not talking on like a 5-minute chart out there, 1-minute chart. We'll just simply call it the 30-minute chart. That would go ahead and give us the first indication. If you see a close below that, and I'm not talking about 2,036.75, 2 ticks or something like that, but some type of conviction below that level, that would tell me that there's another leg to the downside out there. Where would that leg take us to? When we get to that bridge, then we'll go ahead and cross it. But I would say that the most important chart here to determine whether or not this is just simply a oversold relief bounce, I won't call it oversold relief rally, or whether this is truly a rally, is whether or not price inside the ES Mini. Now, I gave you the level of support to be paying attention to. The level of resistance that you're watching is 2,068. So 2 key numbers to be paying attention to inside the S&P futures, in my opinion, 2068 and or 2037 I think it's 0.25 or 0.75. We're going to call it 0.25 at the moment. Getting above that take a look at getting above this 2068 level. That would take out that 7th wave session that, if you take a look at where the market found its top, we've got the battle going on between these 7th waves, because if we take a look at the daily charts inside the ES, inside the Dow, you're going to see, well, you would see here's the daily Dow. So we'll go from the 30-minute to the daily out here. The daily got down into that nice little 7th wave a couple trading days ago, July the 6th, and a nice little hammer candle form, 2 days ago, July 7th. Yesterday was a test. Never actually got down to test the bottom of that hammer candle. We're still trading inside that swing point here from July 6th, so there's no real message that's been provided to us there. We absolutely have to be the, so you've got the battle going on between these seventh waves out here. So to the upside, you take that out. That tells you really that you'd have an A to B equals CD to the upside, at least in the 30-minute chart that would be forming out there. So those are the levels, in my opinion, that we want to be paying attention to throughout the day, throughout the evening, and so forth. With regard to other things to take a look at inside of the market, let's do this here. Let's take a look at this page here. Now, this is weekly chart. The top portion of my screen is the weekly chart for the S&P 500. The bottom portion of my screen is the Dow. And let's go just simply take a look at an important trend line out here just to get a feel for what's going on. I haven't done this. In fact, we can go ahead and add other indices to it. But let's go ahead and we'll make this let's make it white, because white shows up on black backgrounds pretty nicely. So we're taking a look at the week that began October 3rd, 2011. That's an important level out here. It's an important bottom inside the market. Number one, it was this wide thrust signal that we had out there, an important bottom. If we take a look at and again, here's the top portion of my screen. That's the S&P 500. What this tells both you and I is that the market is still in the uptrend. The uptrend inside the S&P 500 has not been tested, has not been tarnished. It is still in place. And what we're using here for our touch points, our magic touch points for that trend, are the lows here also from the week that began November 12th. 2012, as well as that Ebola scare back here in October of 2014. So the trend is still our friend. The trend is in place. To me, that says what we do is we look for bottoms to form, buying bottoms in a rising trend. That's what the S&P 500 is communicating to us. Let's go see what the Dow is communicating to us. Do we have the same message? I don't know. Let's go take a look at it. We'll take a look at that same. We'll begin from that same swing point that began October 3rd, 2011. We'll go right up into that Ebola low, and it's going to really show us the same thing. So what we can see here, there hasn't been a ton of movement. There's been movement, no question about it, jockeying back and forth. There's been movement to the downside, no question. But the question is, should you be looking at being able to sell this, or should you be looking at being able to try to find a place to buy this? Well, my belief, and I'm one of the few out here, my belief is what we're looking for is we're looking to buy this. We're looking to buy this. Maybe it was yesterday. We're looking to buy this because this is going to go ahead and take the market up into, late summer out here. We're already getting a little bit later start than normal. Not too much later, but a little bit later than normal. And hey, let's face it. Some of the other things that I take a look at with regard to analogs out there, they didn't. Well, let's look at it. Let's step back for a moment. Yesterday afternoon, when we started off the show, we took a look at, we got in touch with David White, right? We had the New York Stock Exchange had been shut down. We got the grease fire going on. You've got somebody sent me an email during the show that said Victoria's Secret website was down. Of course, we know the Wall Street Journal was down, but hey, Victoria's Secret, I mean, come on out there. So, you can have all kinds of potential for these lows to have continued, right? They haven't. Trend is still in place. The trend is our friend. Hey, when we get back, let's go out to our friend in California and take a look at Apple. This is Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 79. S&P is up 10. Let's go out to California. Tarman Garo. Garo, thanks for calling. Thanks for holding. How are you doing this afternoon?
Thank you. Very good. How about you, sir?
Good. Well, I guess it's still morning time for you.
Yes, sir. It's 10:30.
10:30. Okay. All right. What time do you get up in the morning out there?
What time is what, sir?
What time do you get up in the morning to begin your day out there?
I always get up at 4 in the morning. I go jogging for 1 hour, 4 to 5 every day. Rain or shine, I go out jogging and so forth. Then I come at home at 5 and shower and get ready to here it starts at 6:30. Yeah.
Yes, yeah. Oh, that's great. That's great. So you're looking at Apple. Tell us what you're doing, how I can assist you.
Yes, sir. On Apple, I have few questions. One of the questions is that does it come down to 200-day, which is around 118, or does it come to 115, which is the gap on January the 25th, 26th? Is going to close that gap. And one thing that I realized on 1st of July, the 200-day exponential crossed below the simple moving, the 200 simple. So whenever the 200-day exponential crosses down below the 200 simple, that is a bad news. That is a warning that watch it, the storm is coming. So
Yes, agree.
Yeah. So which one of these do you agree?
Well, I think really all of them are potentials, right? So what you're doing is you're taking a look at Apple, trying to understand where could Apple fall to. The one thing that you left out is what is Apple doing right now against a support level, which is the swing point here from March 12th. So the determination as to whether or not Apple would come down to the 200-day, whether it be the simple or exponential moving average in the 118 level, the first key area of support that it has to break is going to be that swing point from March 12th. Now, that low is 121.63, and so far today we've seen a low of 121.77. So the low hasn't been tested. Much like when you and I took a look at Phillips 66, we can use that swing point and understand from a volume perspective what is volume doing as it's coming into that swing point. So what we would do is I take a look at the top of that March 12th level out there. Let me just put a line across our screen out here, and that is at 124.90. Now, over the past three sessions, beginning with July 7th, price on July 7th came down with 46 million. Let's not forget our benchmark here is that March 12th day, which has 48 million. So slightly just lighter volume. We saw a bounce out of there. Then yesterday closed actually inside that swing point with volume. 60 million shares. When you close inside a swing point with volume, just like we took a look at in Phillips 66, it says that you are more likely than not to go test either support or resistance. In Phillips 66 case, it was resistance. In Apple's case, it's going to be support. Now it's coming into that level, and today it's 32 million shares. We've been trading for what, about 4 hours, 9th, 10th, 11th, 12th, 4 hours out here. So volume is still, looks to me like it's going to have more than 48 million shares by the end of the day. You know, Phillips 66 missed the test by 1 penny. You'd like to see it at least test 121.63. If it tests it today, closes back above 121.63, and does it with more than 48 million shares, says that there's going to be another test of that area. Doesn't tell us it'll break it, just says there would be another test of that area. If it tested on lighter volume, less than 48 million shares, closes back above 121.63, it doesn't have to go back down there and test it any longer. So that's the first area that you and I have to analyze. The second area is if you close below that swing of 121.63, volume or not. In this case here, I'm going to assume that it would be with volume. Then the answer to your question is, will price get into that 118 area? I would have to say the answer is yes. And I would say more likely than not, it would get down to that secondary level of support, which was that breakout gap at 115.31 from the trading day of January 27th. So that's how I would take a look at Apple and its levels of support and where things could fall to. Does that help answer your question?
Yes, sir. Now it's 121.62. It's 1 penny below that support.
Yeah, so 121. I've got 121.65. So we're, you know, it looks like it did get down to, let's see, 121.62. Yep, it's hit that, so it's tested it. So now we know we've got the test out of the way. The key is going to be where does it close and what is the volume characteristic. Why don't you stay on through this break here? We'll just come back to it and finish this up here because we're going to a hard break, okay?
Yes, sir. Yes, sir.
Okay. We'll be back with Garo to complete our analysis on Apple. This is Steve with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 86, S&P is up 11, and we're on the line with Garo in California. We're taking a look at at Apple, and almost as if Garo was a script writer out there when he called. And how'd you do that? How'd you call so that we could say, yeah, it's going to go test 163, and it did it while we were on the air? You've got some magic going for you, my friend.
Well, here it went. When we were talking, it was 121.62. Then it hit 121.61 at the break time. So it went down 1 penny below whatever it was.
Yeah. Now, here's the other thing that I noticed that you'll want to pay attention to, I think, with regard to trading Apple, because we're now into Thursday, and we've had almost a full week of trading, right? And what I noticed also, Garo, to take a look at is on the weekly basis, Apple is running into that same swing point, but way short on volume. So that swing point is a swing that began the week of March 9th, and the volume on that was 326 million shares. And this week, you've only done 169 million. million. I don't think that it's too likely that we're going to do another 160 million shares here at the end of the week. So I would add one more element on a test of what Apple will do. If it holds 121.63 and it does it on the daily with light volume, we already know that it's doing it on the weekly with light volume. That would say it's run into some pretty good support.
All right.
You know,
otherwise, it's a 200-day moving average.
Yeah, I think if it breaks through support, it is logical that it would head to that area, that 118 area. And since you like to just simply try to get a dollar or two out of an equity, that would be likely where it would head to. I would have to say, with regard to A to B equals CD patterns that could be present here. If I try to add that, I'm just going to switch to a different screen here for a moment. There is a small one that could be set up, and I just wanted to see if we could identify what that price projection was for you. That price projection inside Apple, and I'll just see if we've confirmed that with any kind of volume to the downside. Actually, you've already hit the one-to-one. You did that yesterday and today at 122.83. So there's not necessarily any more work that needs to be done to the downside. 56 million was taken out with 49 million. You know, it was even really taken out with light volume all the way down. So I think we just simply go back to what you and I were looking at with regard to swing points and tests of support, and we go from there.
Yes, sir. Thank you very much. Thank you, sir. Thank
my
you for
pleasure.
your time.
You bet.
Right.
You bet.
Sure.
Thanks so much for calling. That's our analysis of Apple, and I don't know the current weighting structure of Apple inside the NDX 100. I think it's still, somebody in the den knows that probably right off the top of their head. It's 14%. Thank you, David. So 14%. So you could almost say, like, it's not 100%, but as Apple goes, so will the Qs. So let's go take a look at the Qs and see what they're actually doing out here. If we take a look at the QQQ ETF, that's up 53 cents, 106.63. Let's get an idea as to what the ETF structure, the indice is doing out here. Now, inside the Qs, Agaro and everyone else, what took place 2 trading sessions ago was a hammer candle. These were hammer candles across the board. It was basically in every indice, not every, but very close to every index, and certainly the 4 index ETFs that we track, Qs, the IWM, the SPYs, and the diamonds out there. So a real key level of support inside of the QQQ series is 105.83. If 105.83 gets broken and price starts moving below that, and it does it with volume, Apple probably will go ahead and try to take on that 200-day simple or exponential moving average, and more likely go and try to get to that breakout area in the 115-ish range. So the Qs could actually go ahead and drag Apple along. It can go either way out here, but I would say if we see a break of that, that's another way to go ahead and take a look at how this would be trading. Volume so far today in the Qs, extremely light. 16 million shares. We're 4 hours into the session. 16 million shares is trading back into that May 6th swing point that has 42 million shares out there. So in yesterday, look, the swing that I'm referring to, by the way, is May the 6th. That's the one that's been tested. That had 42 million shares. That was tested on July 7th with 44, so just 2 million more. Yesterday, 39 million shares. So even yesterday, and there were no problems inside the NASDAQ out here. Yesterday, the Qs tested and rejected, believe it or not, rejected that swing point with light volume. So the work to the downside inside the QQQ series ETF no longer, just like you and I were taking a look at Apple and testing the swing point. There is no need for the Qs to go back down and test that low again. Just simply don't need to do it. Now, in order to put on the rally cap out here, you're going to need to see the Qs, in order to increase that probability, close above that May 6 high, which is priced out at 107.95. So that's what's going on inside the QQQ series ETF. As long as we're inside here, as long as we're inside these indices, let's go take a look at what's going on in the other 3. Let's go look at the IWM, see what the IWM is doing about the IWM yesterday. Now, the IWM yesterday came down into its swing point with volume. So So a little bit of a divergence here between the Qs and the IWM. Yesterday's volume inside the IWM, 40 million shares going into 34 million shares. That swing was May the 6th. That said, hey, I might be back down there. Now, yesterday was a test of the hammer candle from the prior day. That hammer candle, which is not a swing point, but that prior candle had 39 million shares, yesterday 40. So just slightly more volume inside of the IWM. Nonetheless, you've rejected it with price, meaning you're trading back above that swing, 124.49. You have not rejected it with lighter volume. So I don't think it's going to be the IWM here that's going to be the determinant as to whether the market rallies or it's just simply a one-day bounce out there. Let's go take a look at the SPY, see if we get any kind of message here inside of the SPY. Now, the SPYs are still trading with inside their was it May or March? Their March 26th swing point out here. That's really the swing that we're focused on, and that swing point had 153 million shares. Now, when that was tested with the hammer candle, and it was tested to the penny, 2 pennies below, 173. So that was tested with more volume, 20 million more shares. Yesterday, 164 million going against that 153. So the SPYs moving into that swing point with volume out here until the SPYs close above. They really need to close above 206.37. If they were to do it today, you've got light volume today as we speak, 79 million shares. Any close above 206.37 today, you would have a rejection of that swing point on light volume out there. If it closes inside 206.37, volume or not, says you can go back down and test that low. Again, 204.12 is the magic number. If we take a look at the Dow Diamonds out here, the Dow Diamonds trading out at 175.85, up 85 cents. 2.9 million shares is what has traded. It's also dealing with the swing from March 26, 6.6 million shares. Tested with that hammer candle a few days ago, but that hammer candle had 7 million shares. Tested yesterday from a swing point standpoint, 6.8 million shares, and it closed below that March 26 level out there. So that was spelling trouble. Now, if you close below it again today, 175.46 is the number that you are taking a look at. If you close back below that, to a certain extent, there's only one thing inside the Dow Diamonds that will stop it from running all the way down to its next swing point, and that is February 2nd. And that one thing, like Curly said in that movie, what's that movie, Curly? You know what I'm referring to. In any event, what Curly said, that one thing in this case happens to be the low of the swing point of that hammer candle from July 7th. So the key number to be watching inside the Dow Diamonds is 174.44. So that's your ETFs. That's your ETF structure in taking a look at what is going on there. Let's take a look at, we've got 6 minutes here. Let's take a quick spin around and take a look at the currency market out here. Let's go see what we've got going on in Euro land. If we take a look at the Euro, Japanese yen, this is not necessarily looking good, but it's really been consolidating-ish, so to speak, ever since the May 26th level. That May 26th swing point is where price is trading into as we speak right now. We don't see any kind of bullish reversal signals here as of yet. This A to B equals CD that I've drawn in here will certainly vanish and go away if we see any tick below 133.10. We have not seen that yet, but I don't see anything other than the mere fact that the Euro Japanese yen has moved into an oversold condition. If we take a look at that 14-period relative strength indicator, you can see we're trading out at, or it's priced out, it's calculated at 29.88. 30 basically gets you down into that oversold level. If we take a look at what's going on, the euro versus the U.S. dollar, trading back just slightly. Of course, we know that inside this currency pair, she broke its slightly rising price channel, got out of the channel, tested it to try to get back in, has been rejected. At this stage here, what we know is that the euro U.S. dollar has broken its trend. Now, that break in trend says that it can take it down to this swing. We talked about this yesterday of May 27th. But the reality is that level, that one thing that what's that guy's name? Curly out here. The one thing that he would say was it Curly? Was that the guy's name? I think Curly was the cowboy, right? Billy Crystal played. Who did Billy Crystal play? That was a long time ago. Seems like a long time ago. Look, here's the key. July 7th, when we take a look at the euro versus the U.S. dollar, and that's going to be 1.0916. You close below that hammer candle, then you'll go test the low of May 27th. That's at 1.0819. You get below that, and then you're all the way back down to the lows on April 13th to be specific. That's what's going on inside that currency pair. Inside the Japanese yen, boy, that thing just took a dive yesterday. Big, wide-ranging bar. What is the Japanese yen versus the U.S. dollar doing out here? You know, there is a possibility. Well, here's what needs to happen, which we take a look at possibilities. There is this horizontal line of support out here. It looks like a hammer candle from March 26th. So March 26th is going to be a key day inside of the U.S. dollar, the Japanese yen U.S. dollar, 118.33. If we see a break of that level, then price should fall all the way down to this rising price channel that's been in place for quite some time. That's the red diagonal lines on my screen out here, taking you back into a year ago, July of 2014. That's what we'll use as its rising price channel. So that covers the currency pairs. Well, I didn't get to the Great British Pound. Let's not leave that out as we take a look at the Great British Pound. This also is a daily chart. Now, the Great British Pound did break its rising price channel. I do not see anything here candlestick-wise other than this candlestick here from June 1st. It was really the June 2nd candle that we're taking a look at. That was your bullish engulfing bull sash style candle. So 1.517 is the likely target and support area for the Great British Pound. Hard currency-wise, let's take a look at silver. Let's go see what high-ho silver is actually doing out here. Up 19 cents, trading at 15.36. Now, what silver has done, fairly impressive out here, is it's traded all the way back into the bottom of this swing point, this candle session, that wide-ranging bar from December the 1st out there. And actually, I took a look at the COT data. I did not update. The COT data, because of the July 4th holiday, did not come out until Monday. And I began taking a look at it last evening, remembering that it came out on Monday. I was trying to figure, why didn't I update those charts over the long weekend out there? And the reason I didn't update my charts is because there was no data. But what was interesting, gold not really providing a ton of a message out here. But silver, high-ho silver, different story. Silver is showing that the large commercial traders, they of course they're large, but the commercial traders have moved back to that short area, net short area, where silver has formed other bottoms. So kind of interesting that silver held that swing point. No bullish reversal signal or anything there, but silver is the one that really we probably ought to be watching more so to give us our next message with regard to what Goldilocks wants to do out there. Right now, trading at 15.36. No message other than coming back to a level of support and knowing that commercials are actually gearing up for some kind of move higher inside that shiny metal. They're not so certain as to what's going on inside gold. At least that's my read. I have not been able to come up with a percentage level, their net shorts as a percentage of open interest as to what they're really thinking. I think they're thinking that the guys in Greece you cannot be. What's the best way to put it? That they're wild cards out there, that they're just simply wild cards. And so I think that the commercials are really just kind of stepping aside and not taking any type of significant position one way or the other out there. Moving again in the markets, let's take a look at Chipotle, see if there's any kind of volume behind its move. We are into earnings, but I do not see earnings central. I do not see any earnings report inside of Chipotle. Chipotle's got an issue. It's got a supply line out here that takes you into the trading day of April 22nd. Nice little rally this afternoon. You've got 500,000 shares, so volume's not too bad as it takes out some previous swing points out here. The most recent one is June 22nd. That had 500,000 shares, so not too shabby there. And trading into the May 28th level, that had about 900,000 shares. So a little bit lighter volume, but not too shabby. Nonetheless, the price level for Chipotle, where it may really struggle, is about $656.99. Right now, we've got the Dow. She's up about 90 points, 92. The S&P's up 11. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is up 75 points. S&P is up about 10. Composites up 30. In trying to wrap this radio hour up here, I'll share with you one other interesting pattern out here. Now you're looking at the S&P 500. Let me open up the screen. Let me do this here. Let me turn off these cycles one at a time, and then I'll turn it back on. It'll be easier for you. I believe it'll be easier for you to follow. Now, we're going to take a look at what I'm turning on and off. I'm taking a look at this low out here that took place. This is a daily chart, by the way, that we're looking at. From the swing point low on August the 7th to the swing point low on October the 15th. Then, interestingly enough, that low took 47 days. You can see it took 47 days in its cycle to actually form out there. If we take a look at the next cycling low, let me do this here and turn it off. That's from that October 15th level down to the price point on December 16th. If we take a look at that, that actually took 42 days. I got to turn this back on. So that was 42 days. If we take a look at the very next cycle, so you got a 47, you got a 42, that magic number. If you take a look at it in mathematics and religion and just about everything out there. I mean, we do talk about the Fibonacci summation sequence, but, you know, the number 42, that's got a life of its own as well. If you then take a look at the next cycle out here, next cycle bottom that I could identify, and I am no cycle expert, although I do like to ride a bicycle for an hour a day and go about 16, 17 miles. So I enjoy that. Where Garo does the jogging, I found it to be a bit too hard on my legs and feet and things of that sort. But either way, as long as we all get exercise, we're in good shape out here. If we take a look at the next cycle out here, that next low taking you into the lows back here in March of 2015, March 11th, that took about 26 days out there. But then that next cycle, now we're back up to our 40s. We're back up to our 40s, and that's the cycle low here, which is an important day, May 6th. We take a look at swing points right now, where price is testing against, bumping its head into. We take a look at the ETF structures and so forth. We're looking at March 26th, but we were looking at May 6th out there. Well, if we take a look at from that swing point to the next swing point out here, that takes us into the low from that hammer of 2 trading sessions ago, 42 days. So if we take a look at cycle bottoms that are out here, I'm just saying, don't be too surprised. Don't be too surprised to find out that that hammer low was, in fact, the bottom. We just simply take a look at just normal, natural cycles inside the S&P 500. And then finally, what does that say to both you and I? That says that if we are taking a look at about a 42 cycle period low, if in fact that is the low, you're looking at the early part of September, some type around there, before we see the next bottom. That, of course, says sometime in between now and then is when we would see the next high as well. So we'll leave it at that. If we take a look at the summation index out here, the Dow still just above the zero line. I don't think we're going to see that in the other two out here. Again, the VIX index, I see a little bit of conversation inside the den. I'm not following it completely. Bottom line, it has not taken out the 1980, but I think the more important element when we take a look at the VIX is what are the front months doing here compared to the cash indices. You've got a contango out here. When you have contangos, the one that we saw yesterday, especially what that tells us is that typically is a mark of a bottom. This whole, all this stuff that's going on here as we speak right now, it's just, look, selling fear is easy to do. Sort of keeps you glued to the television. Buying fear, that's a whole different story. Well, folks, thanks for joining us. Stay tuned. Our man David White is up next. That's Squeezably Soft. Yeah, he says squeezably soft, so I'm going with it. So stay tuned for his show, and I'll see you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.